Welcome to another edition of Selling Life and Annuities. I'm Tim Luby. I'm the National Sales Director for Annuities with Gordon Marketing. And with me today is Paul Bechtold. He's our Regional Vice President and Manager of our Debt Elimination Programs. And today's topic is the 5 foundational financial principles. So Paul, what are the 5 financial principles?
Well, actually, Tim, it's funny. There's a lot more than 5 foundational principles. But recently, I've kind of implemented this as a revision to my sales process when I'm in front of a client. I have an agent up in Wisconsin, and she's doing phenomenal with debt elimination cases. And so we do a lot of Zoom meetings, and we're meeting people for the first time. And she's doing through a federal benefits program. And as I'm helping her train her and meet these clients, I've found that there's certain things to talk about to kind of help set the table up front with both the client and the other agent and get kind of on a level playing field. Okay, so obviously, whenever a financial advisor, anybody's talking to somebody about their finances, the first thing I think I see that the client get into is kind of what are they asking me to invest in? Where am I going to put my money, right? The first thing I want them to feel comfortable with is, look, I'm not putting your money anywhere where it's going to lose any money. Okay, that was Warren Buffett's famous 2 rules about money were. Rule number 1 is first lose no money. Rule number 2 is don't forget rule number 1, right? So I start with that. And it always helps to reference the most successful investor of all time, right? The second thing is I again, on a common sense basis, I usually use my hands just like this. And I say, would you agree that it's a zero-sum game financially out there? It doesn't matter if I grow your assets by 15% or I cut up a credit card and eliminate a debt that's bearing a 15% interest rate, right? The net effect's the same, right? And so then that leads into the third principle, which is guarantees trump risk and speculation every time, right? When I cut that credit card up that was carrying 15% interest because I no longer have that debt, that's a guaranteed return on my money, right? If I had a $10,000 credit card and I eliminated that debt, that is a guaranteed return versus I'm going to take $10,000 out and invest in the market or go into some speculative kind of investment, right? Okay. Right. The next thing is, and really honing in on this as we kind of go down this list, is it's got to be based on math, not emotion. Okay. And that is a lot of times that's a big hurdle to break down with the client because they think and they feel and they've been told and you know, for instance, you've probably heard this. How many people do you know in the last 2-3 years that got hot about Bitcoin? Okay. And they know nothing about Bitcoin whatsoever. It's a very speculative investment per se. Not that they shouldn't do it, but how many really understand how Bitcoin works and why it would go up or down in value, right? It's an emotional reaction based on things that they've heard their friends or other advisors tell them, right? And then the last principle I like to implement in this 5 principles is it's got to be on an equal basis that we're making a comparison, right? So, for example, when I'm helping people eliminate debt, free up cash flow, and build wealth, I'm doing it on a tax-free basis. I'm doing it on a risk-free basis, right? When somebody says to me, well, I can get a better rate of return, right, by going out in the market and stocks, bonds, mutual funds, whatever the case may be. Well, they're entering financial elements into the equation that I don't have to enter into, right?
Right.
Would you agree? So, similarly, if I was comparing, getting somebody out of debt, freeing up their cash flow, and now taking that money and putting it in another place, putting in another life insurance policy where it's tax-free on the growth and distribution versus I'm going to go buy an annuity and now I'm bringing taxes into the equation. Right. Would you agree? I'm not comparing on an apples-to-apples basis.
Right. So you've set the stage for that. You've gone through the 5 principles. So do you get pushback sometimes on these foundational principles you're sharing with them?
Actually, no. You'd be surprised if you go through them kind of on a tick-by-tick basis. I'm going to ask a question. I'm going to kind of stop and take temperature and see if they agree.
So
Once they
getting
agree,
agreement as you go through it.
yeah.
Typically.
So I'm doing trial closes as I go along. As I ask each one, okay, first of all, first lose no money. Do you have any problem with that? No, obviously, right? Then do you agree it's a zero-sum game, right? If for some reason they would say, oh no, I don't know that I agree with that, then I know we want to break that down, right? But I don't, because usually they're kind of universal truths that work no matter what. And so I'm asking loaded questions that I already know the answer to.
Right. So are there other aspects to consider, as you, probing them and I guess getting a nod or some sort of agreement there, but are there other aspects you're looking for?
Sure. Not everything is a cut and dried financial decision, right? I'll give you an example. Liquidity, use, and control and cash flow of somebody's money, okay? That's a difficult thing to quantify, okay? If I'm taking their money and I'm showing them the most effective way to get out of debt, but I stifle their cash flow and now they don't have enough money coming in as quick as it's going out, et cetera, and they feel stifled in some kind of way, well, I have to deal with that element. And sometimes some of those aspects of financial planning aren't as easily measured.
Oh, interesting. So, you're using these principles, you're sharing them with clients. I guess ultimately, does it have an effect or an impact on your close ratio?
Absolutely it does, because you're getting buy-in right up front as to what the rules are that you're playing by. And as I said, you're doing trial closes along the way. So once I get down to showing them how to redirect their money in a better manner, and by the way, the software's phenomenal. It shows them the actual effective interest rate numbers that they're paying on all their debts and all that. It's kind of a slam dunk after that, because they've already agreed up front as to what they want to do with their money and how they want their money to be treated.
All right. So you've obviously done this. You've got a lot of practice. Do you have an example, a recent example that you can share with us?
Absolutely. I had a great case this week. Again, I was talking about this agent that I have in Wisconsin. Had a client on the phone. She had $122,000 of student loan debt just for herself, a husband and wife, and she had reported that as one debt. Well, the first thing we did is I said, is that one debt or is that several loans? And she said, no, that's actually 6 loans. When we did the analysis, it was actually 12 loans. Couple that with a few credit cards, couple auto loans, a mortgage, and all that. They had 20 to 22 debts to pay off, okay? And when I showed them the effective interest they were paying on each of those debts, there wasn't one debt that was under 60%. So I simply said to them, can you think of a better place to put your money other than paying down those debts that are bearing at 60% plus? Because it's the same as growing your assets by 60% plus, but I can guarantee your success. And by the way, the number was, I think they were out of debt in 5.5 years. So that's pretty instant gratification for somebody that thought they were going to be a slave to their debt for the next 30 years of their life.
Wow. Right. So debt elimination is hot, and you're obviously really good at it. So for the benefit of those that are watching with us today, how do they engage with you? How do they reach out and get your help in this critically successful arena?
Well, the first thing is I always have my cell phone with me 24/7. Give me a call, 317-626-3054. paul@gordonmarketing.com. I promise to get back to you within 24 hours. We really got a crawl, walk, run approach to this. Find a client, has debt, wants to get rid of it, get a little bit of financial information, get it over to me. I can show you how to be very successful with this. Just had a brand new agent this week. Brand new to this. We're going to do probably 2 cases of a minimum of $2,000 per month. He would probably, on the 2 cases he's looking at, make over $10,000. Let us show how we can do that for you as well.
Great. Well, thank you. So our time is kind of drawing to a close here, but thank you, Paul, for this really valuable information. For the benefit of those that are here, if you would please subscribe to the link below. Hit the notification bell so that you hear about all the Selling Life and Annuity opportunities and videos as they're coming up. And if you would like, comment, and share, that would be tremendously appreciated. But with that, happy selling.